business news, we're news for business people.
Good afternoon, you're watching Bloomberg Quint. The top headlines. Markets trade negative off the RBI policy with both benchmark indices trading mixed. Broader markets outperform. India WIX declines. The street eyes the last monetary policy committee meet of the current fiscal. Just 1 out of 33 economists polled by Bloomberg expect the MPC to hike rates by 35 basis points. And the US FDA conducts a surprise inspection at Kerala's Moraiya plant. That's a Bloomberg Quint exclusive. The Supreme Court quashes all iron ore mining licenses renewed by the Goa government, says new tenders have to be invited for the 88 mines. And among key earnings today, Cipla, Aurobindo Pharma and Eicher Motors will post their quarterly numbers. Those are your top headlines. I'm Agam Vakil. Up next is Hot Money with Darshan Mehta.
Thank you, Agam. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. T.S. Harihar of HRBV Client Solution and Dinesh Rohira of Finance.com. They join us on the show. Thank you to both for joining me on the show. Today on Hot Money, we'll discuss stocks like Lupin Hero Moto Q3, Jet Airways, and we'll ask them for one investment idea post the market correction that has happened. Let's start with the first one, and that is Lupin. Numbers came out yesterday. Disappointing set of numbers. Stock hit a fresh 52-week low. Today has managed to regain some bit of it, but the outlook that the management said was that FY19 also looks challenging. So what should one do with the Lupin going ahead? Dinesh, what did you make of the numbers and the management commentary?
So obviously the numbers have not been anything to write about, as well as the commentary. There are still a lot of challenges that are ahead for them. We do see a 2-3 year protected earnings for Lupin. US market, their business is, while they have to build that business afresh, get into their US FDAs and all this stuff, but that will take its own time. So from that context and the numbers that we look at, we would stay out of it.
Okay, but given the fact that how valuations are, it's one of the cheapest stocks in the pharma space. Do you think that valuation-wise it is bottomed out? Someone should buy it for, let's say, a 4-5 year perspective. Do you think that again pharma will be back as a sunrise sector?
So valuation-wise, it is reasonable. A blue chip stock at sub 20p when the industry is at around 29-30 odd. It's one of those blue chip stocks at reasonable valuations. Somebody has a horizon, they may want to look at it, but I would not advise that because there are better sectors. Pharma is still not coming out of the bad days. A lot of challenges ahead, and specifically for Lupin. So this could be a valuation level that may remain for the next 1 to 2 years. So better to avoid that. Okay,
and you were not encouraged by the commentary at all?
Not really, not really. No, nothing new in the commentary that states that the downturn that has gone into it would, correct soon. So I expect Lupin, which has started from 500-600 levels to about 2000 odd levels, it is closer to at 800 now. I expect if the market's correct and pharma remains downside, then Lupin can go closer to where it started the entire journey from. Okay. So we would want to stay away from it.
Okay, stay away from Lupin is what Dinesh is saying. Hari, what did you make of Lupin's commentary? It's trading at fresh 52-week low. So do you think that it could slide further? And what did you make of the numbers and commentary?
See, firstly, I think Lupin is a value trap, because it's very hard to say that such companies are undervalued or overvalued. Look at a basic piece of statistics. I think the OPM of Lupin was about 33-34% about 2-3 years back. It's now 18% in this quarter. And our hunch is it could probably slide by another 300 to 400 basis points. So we are actually looking at lower valuations even. So even 18-19 may look to be theoretically attractive, but I think it's a value trap, so there could be further downsides. I would probably agree with Dinesh that it could get back to probably 600, sub 600 levels. I think it's entirely possible. I'm also worried about the fact that their top line has fallen this quarter. It could partly be because of the diabetic drug they launched in last December, but I think fallen top line is never great news as far as the US markets are concerned. So for us, Lupin, Sun Pharma, most of them are clear value traps, and our suggestion is just avoid these kind of stocks.
So you're basically negative on the entire pharma pharma space as such, or a pocket of pharma space, let's say the US exposed companies, or across the board you believe that pharma is not?
No, we have three levels of pharma. You know, at the lowest end, we would say the frontline stocks like the Reddy's, the Sun Pharmas and the Lupin, which have a fairly large US exposure. Slightly above that, we are looking at stocks like Glenmark, which also have an equally good European exposure. So I think Glenmark is something we would put slightly above that. And above that, we would put stocks which are in the healthcare and healthcare delivery sector, which are not exactly the makers of generic medicine. So I think that is a sector we would still buy. But the makers of generic medicines, I think, would be a strict avoid for us.
Okay, so that's a consensus view that's coming in on Lupin at this point of time. Results were poor, stock trading at fresh 52-week low. And our guests do believe that, the pain probably will continue. It's an avoid even for a slightly longer term perspective because it may stay at these levels only. The next stock that we want to talk about is Hero Moto Corp. Came out with a decent set of numbers. It met what the street had anticipated. Stock is trading up almost 1% and pretty much one of the cheapest stock in the two-wheeler space if you take a look on an FY19 basis. What should one do with Hero Moto Corp? What did you make of the numbers, Hari? And what should one do with Hero Moto Corp?
See, two things are coming out. One is, I think, the top line, there is clear traction. And I think that could largely be because the rural demand has been picking up. The suburban demand, semi-urban demand has been picking up. And I think that seems to be showing in the 16-17% growth that they showed at the top line. The worry is the bottom line. I think the profit growth has been much more muted. And that is largely because I think input costs have gone slightly out of control as far as Hero Moto is concerned. See, we like the space as a kind of a concept. You know, if you're looking at a rural-friendly budget, you're looking at rural incomes going up, I think Hero Honda could be an obvious beneficiary. But if you're looking at the two-wheeler space per se, I would believe that Eicher would be a much better bet compared to Hero Moto Corp.
Okay, but what would your pecking order be? Because there are four large companies in the two-wheeler space, at least among the listed one, Hero, Bajaj, Eicher and TVS. So what would your pecking order be here? For me,
it would be clearly Eicher at the top because of the unique positioning they have made. Below that would be TVS because they still have the ability to manage their business at a much better margin. After that would be Hero Moto and followed by Bajaj. Okay, but you're saying that TVS, which trades at a much higher multiple, is still attractive to you compared to stocks like Hero and Bajaj, which have higher cash flows. Absolutely.
Okay, so that's the view that's coming in on Hero Moto at this point of time. Dinesh, what did you make of the numbers and your view on the autos or two-wheeler space? So
I would agree with Hari. The numbers are decent, attractive. Apart from the rural focus that Hero already has, and it enjoys a leadership position in that space and hence would be the beneficiary as an outcome of the budget. What is also encouraging is that they have improvised on their market share in the scooter sector. Right? They've increased from 12% to 14% in a year's time frame. So that's a segment which they were completely absent around, and they've done a decent market share capture out there, as well as in the premium bikes. Right? So I think their the spread of the product line is increasing. Their target segment is increasing. The rural segment is doing well, so their bread and butter business is doing extremely well. In terms of ROE, they are pretty decent. They are at 37%, so managing their money well. The business is doing well. So I would be positive on Hero from a long-term perspective.
And your pecking order in the two-wheeler space?
So my pecking order would be Eicher, Hero, and then TVS and Bajaj.
Okay, so Bajaj pretty much plays at the lowest. Do you think that this scooter, not having the scooter story, is denting Bajaj Auto in some
In
way?
hindsight, you would say that yes, while the decision at that point in time was correct when they exited that business. But if you look at hindsight, they could have done it better in terms of keeping that story still on, because as we are seeing in now, Hero getting in and gaining a market share of 14%, whereas Bajaj used to be the leader and not existed in that business anymore. Obviously has impacted Bajaj from an overall basket standpoint.
Okay, so just wanted to ask you and Hari also, what makes Eicher so attractive? Because right now the counter is reeling, but in middle there were concerns that the big demand supply mismatch is coming down significantly. It always had that premium because bikes were not there and the demand was not. But now that seems to be contracting. Is that not a concern for Eicher going ahead?
So a large part of the market in the two-wheeler space has gone into looking for aspirational products, right? And that's where the run for Eicher is. And as the economy grows forward, that aspirational product demand is only going to increase.
Okay.
Apart from the fact that the management is pretty well versed out there, what he's done is all the right set of things to, capture the demand well in time and build the entire product line. So yes, there would be these challenges, but I think I have faith in the management in ensuring these challenges are out of the way.
Okay, your word on Eicher, what makes it your top pick in the two-wheeler space? What's your rationale?
See, the fundamentals apart, I think the price point is very important. Had you asked me this question at 33,000, what it touched about a few months back, I would have probably put Eicher at number 2 or number 3 in the pecking order. But I think at 27,000 and odd that it's quoting at right now, I think most of the worries that you're talking about, the demand gap compressing, appears to be factored into the price at this point of time. So I think the margin of safety appears to be back on the stock, which didn't exist at 33,000. So I think that is what is actually impelling us to push Eicher as a two-wheeler pick above the others.
Okay, so that's the view that's coming in on Hero MotoCorp. It's a bullish view that's coming in, but a consensus buy has come in as far as Eicher is concerned from both our guests. So that's the top pick from our guest on the two-wheeler space. The next stock that we wanted to talk about is Jet Airways. Had a big run up, but suddenly it seems to be losing steam. It's down almost 20% from the recent highs. Obviously, crude will be one of the factors that's inching up significantly. That's caused it, and several news in terms of potential tie-up or a potential M&A. Those were the news that propelled the stock much higher. Now that the counter is down almost 20%, is it a good value buy or should one avoid the aviation space? We'll ask again. Dinesh, do you like Jet Airways?
I do like the aviation space.
Okay.
And Jet being a prominent quality player for all these years in terms of the domain expertise and knowledge, as a brand they carry a lot of significance, as well as they have gone through the down cycles and they've come up back again, right? So I do have concerns on crude, but with the budget emphasizing on airport expansions and all that stuff, more routes being opened up, etc. and all stuff, so I would and the kind of M&A activities that Jet keeps coming and talking all about it on every frequent intervals. From that context, I would be a positive on Jet Airways from a long-term perspective. Short-term, I would stay away.
Okay, short-term you and what will be your pecking order?
Short-term is primarily because of the crude challenges.
Is it only Jet or the entire aviation space?
Yeah, I do like the aviation space. Short-term from a crude perspective, I would stay away. But the pecking order would be SpiceJet, Jet and Interglobe.
Okay, SpiceJet would be your top pick.
That's correct.
Okay. What about you, Hari? What did you make of the aviation space and Jet Airways as such?
See, quite obviously, I think the worry seems to be on crude, because I think at $70, $71, crude is not cheap. At least what I call the dividends of cheap crude don't appear to be accruing to airline companies any longer. I think the only thing that's apparently working in favor of Jet is that the domestic aviation business is growing at about 18 to 20% on an annualized basis. I think that is a positive, and my hunch is if the government delivers on its promise of airport connectivity, etc., this 18-20% growth should continue probably for the next 5 to 10 years. So that is a positive. But if I think crude is anywhere 65 plus, I would not touch any of the aviation stocks. Be it Jet, be it Indigo. I don't think any of them is worth buying if crude is above $65.
Okay, but in terms of if someone wants to, let's take a look at aviation, what would be, which is the best and which is the worst among the three?
I would still go with the leader. So my preference would still be for Indigo.
Interglobe
Aviation.
So Indigo is what Hari is speaking about, and SpiceJet is the one that Dinesh likes at this point of time. But both of them are saying that crude at this level in the short term, it's a little cautious as far as the aviation stocks are concerned. Before we move on to the stock pick, let's take a quick recap of all the guest views on the stocks that we've covered till now. Okay, since the market has corrected significantly and probably the correction is continue, lot of value stocks will be available almost 10 to 15 or probably in the mid caps almost 30% lower than what the peak was. So we'll ask our guest which are the good value picks that that you should be looking at as an investment perspective. Probably the market can go down, but these are a little long-term picks that we're asking our guest. Dinesh, the stocks that you've named are GVR and GVK and GMR.
That's right.
Yeah. So what is the rationale?
So again, I am focusing again on the budget emphasizing on the airport infrastructure and all that stuff when I'm picking these ones, apart from a higher allocation to the infrastructure sector overall. Also, these two scripts have are just coming out. I mean, in 2017 is the first year. They've been coming out after an 8-year bear cycle. The cleanup of the books is on the way. Dilution of non-core assets is happened, and specifically more for GVK. Right. So from that context, and for GVK, the Navi Mumbai airport also would act as a good kicker when it goes live by December 2019. So from all those perspectives and the current valuations, if I see from a potential standpoint in the sector, I like these two stocks.
Okay. So
GVK and then GMR.
Okay, so GVK is your preferred pick. So one or two questions. First of all, what is the debt situation at GVK? And like you said, the Navi Mumbai airport will come up. So will that not again take a leap as far as debt is?
But right now, the debt situation at GVK has significantly gone down. They are in very low levels today, right? I guess about, I don't know the exact details at this point in time, but they have significantly cleaned up after diluting their stakes in the other airport projects that they had. So from that context, it makes sense. And Navi Mumbai, while they will take on some debt, but there's a lot of traffic that will emanate from there, right? So right from the beginning, they would get significant business traction from that environment.
Okay.
Right? So all things put together, and the current market cap, if I would say the size of the assets that they have and the current market cap, it sounds quite cheap. In 2017 itself, it has moved up from a down of 5-6 levels to about 23-24 levels. Right. So I guess these are high beta stocks. When they go through their upcycle, they multiply it 10 times.
Does GVK have any other non-core asset that it has to monitor? GMR obviously has those land parcels.
That's correct. That's correct.
For what does GVK have?
From what they have done so far, there aren't many large ones left right now, but they've done sizable cleaning of the balance sheet. Okay. So I guess they are ripe for the next upcycle in their business models.
Okay, and in terms of the other businesses, which apart from airport, which is their main
power also is going to be reasonably doing well for them. So from that context, though airport is one which would contribute significantly, and the rest of the infrastructure pieces that they will focus on.
But somehow they have not been able to, GMR and GVK for years on always said that they want to create shareholder by dividing the businesses. Somehow they have not been able to do it.
They have not been successful. I agree with that. And that's the reason why they've gone through such a large bear cycle. Right? But now with the act coming together, right, I do see that they will go through the second rung now. Right? So they have not been able to, and that's the reason why they are at such low values today, such low valuations right now. But the next upcycle in the infrastructure sector, specifically when you have the election year around and all that stuff, the investments that would happen in the infrastructure sector, they would be the flag bearers in that space.
And what's the rationale for GMR? What's happening there?
Similar rationale, but valuations at GMR are not as attractive as in GVK, but similar pieces out there. They are recently now, while there are tensions out in Maldives, but they are taking over the airport, etc. And they are diluting their stakes in other non-core assets. The debt levels are still a concern, 3,000 crore odd or something like that. They're still a concern, but I guess with the level of assets that they have, and next few months, I do expect some amount of monetization of airport assets happening around. And same for GVK as well. So the moment they start monetizing some of these airport assets, I guess the sum of part values would be better off.
Okay, so that's the view that's coming in. GVK is the top pick, and then GMR. Let's just cut across for a while to Narendra Modi. He's speaking. Let's just listen into what he has to say.
ये प्रकार की चीजें शोभा नहीं देती। सभापति महोदय जी, कल मैं कांग्रेस पार्टी के नेता श्रीमान खड़गे जी का भाषण सुन रहा था। मैं ये समझ नहीं पा रहा था कि वे ट्रेजरी बेंच को संबोधित कर रहे थे, कर्नाटक के लोगों को संबोधित कर रहे थे, कि अपने ही दल के नीति निर्धारकों को खुश करने का प्रयास कर रहे हैं। और जब उन्होंने कल बशीर बद्र की शायरी से शुरू किया और खड़गे जी ने बशीर बद्र जी की शायरी सुनाई, और मैं आशा करता हूं कि उन्होंने जो शायरी सुनाई है वो कर्नाटक के मुख्यमंत्री महोदय ने जरूर सुनी होगी। क्योंकि उस शायरी में उन्होंने कहा कि दुश्मनी जमकर करो, लेकिन ये गुंजाइश रहे जब कभी हम दोस्त हो जाएं तो शर्मिंदा ना हो।
Okay, that was the Prime Minister Narendra Modi speaking in Lok Sabha. Okay, so Dinesh spoke about GVK being his top pick and then GMR in that order for a long-term perspective. Is it a multi-bagger story or a compounding story?
Yes, it is a multi-bagger story.
Okay, that's a multi-bagger story that he believes that this could be. It's a positional play, no doubt. But Hari, you picked Bajaj Finance. What's the rationale here?
See, my logic is, in the entire finance space, I think this rural thrust of the budget is going to be a big game changer.
Okay.
Because what's going to happen is, you now need genuine finance companies which can do last mile delivery of a lot of financial services. And I think Bajaj Finance appears to be one of the best poised. If you leave out the MFIs, which have their own set of problems, Bajaj Finance appears to be the best poised. Look at the financials. I don't think there's any other finance company with about a 68% operating margin or a 19% net margin, and your NPS on top of all that is below it's about 0.7 or 0.72%. You can argue that 6 times book is slightly expensive for a finance company, but I think if you look at the opportunity and the way they manage their finances, I would believe that it's the equivalent to what HDFC is in the banking space. It's a kind of a rich company, expensive company, but I think to a large extent it's justified because of the way they manage their assets. So we like this stock. I think we don't call it a multi-bagger, but surely something that can deliver 40-50% every year, I think, over the next 3 or 4 years.
But do you agree that valuations are expensive? So you chase growth over valuation?
Yeah, absolutely chasing growth over valuation.
Okay, so that's the view that's coming in from Hari. He likes Bajaj Finance as a long-term pick. Before we end the show, let's talk about the Auto Expo. Maruti Suzuki kicked off the 14th edition of the Auto Expo with its concept vehicle. The event, which will have 23 automakers showcase their vehicles over the next 5 days, will be the event that will provide a platform for automakers to showcase various electric vehicles as a part of the government's vision to make an all-electric vehicle country. Hyundai too has unveiled its new Elite i20, while Renault unveils the Razor electric car. And Kia officially debuts in India with the compact SUV concept at the 2018 Auto Expo. Bloomberg Quint's Alex Matthew caught up with Peter Sherrier, Chief Design Officer at Kia Motors. He said that the company is strongly working on the electric vehicle and soon will be launching the new EV in Kia and Hyundai.
Yes, this is the concept car for that project. So we're going to launch the actual production car in the next year.
In the next year, and that's going to be completely domestically manufactured right here.
Yeah, it's going to be manufactured here in the new plant. And this is going to start next year, as I said.
All right. So that's gotten that part out of the way. That's the showcase of the event. But also another thing that a lot of the manufacturers here are talking about is electric mobility. And as the design head at Hyundai, you've got your hands in a lot of projects, I'm sure, across the world. What can you tell me about where we are at with regard to electric mobility and how fast we're likely to go?
Yeah, we are very strongly working on electric cars, on full electric cars. Hyundai is going to show an Ioniq electric car here at the motor show. We have the Soul EV here. We have 2 more EVs already in production. Not here in India, but in Kia. have the Ray, the Soul, and then very soon also the Nero which is a hybrid at the moment, but it's going to be an EV version very soon. And we are also working on quite a few electric projects of full electric cars for the future in Kia and in Hyundai. Also, the SP concept that we are showing today at the moment is we are considering an electric version as well.
Oh, so there's going to be likely an electric version of the compact SUV you're showcasing today.
Let's say there is a good chance.
There's a good chance. Now, from a design perspective, Peter, and this is my last question to you, with regard to electric mobility and the vehicles that you are designing right now, what are the challenges that you're currently facing, and how do you see them sort of getting solved from the technology perspective?
Yeah, from the technology perspective, the challenges in electric cars are the batteries, for example. This is a technical issue. For the design, it's more. I see it as a very interesting challenge because the car industry is in a transformation process, and as soon as you have a car that is only electric and a dedicated electric, an EV, we can make a different architecture on the car, and we can work with different proportions. That's very interesting.
Okay. Hari and Dinesh, thank you so much for joining me on the show. With that, it's a wrap on today's Hot Money. Ask BQ comes up next. Stay tuned to Bloomberg Quint.